Today we're going to talk about the 915-4115 trading system. What I consider to be one of the best kept secrets in Forex day trading. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Thursday, April 23rd, we've already had 4 reasonably good days in the market. Today, early movement in Asia, not a huge amount of movement thus far today as we head in towards the US session. Oil, massive moves this week, but generally speaking, the pound crosses have all had a reasonably good week. There's been 50 pips pretty much every session, if not 100 pips in a couple of the pairs on some of the sessions, and on a couple of the days, 150 pips. Again, our 50 pips a day simple trading system, I think without a doubt, has pretty much lived up to its potential every single day for at least one session of giving a textbook basic simple 50 pips, 50 pip trade where we've had a 1-bar stop, and we've reasonably, without fail, there's been one perfect trade setup every single day. Now today, we're going to review our system first, but then I'm going to go into the 915-4115 trading system, which I think is going to help cement some things, and it's one of the best kept secrets in Forex trading. So stick around, we're going to go through that, and I think you're definitely not going to want to miss that. Keep it simple, traders. Just reviewing again, structure, we look for bigger geometrical patterns. You might have an ascending triangle, you might have a descending triangle, you might have a head and shoulders pattern over a couple of days or even during the day. We talked about some examples of 3 push patterns. I've had a lot of questions about 3 push patterns. You can have 3 push patterns in one session. You can have 3 push patterns over the course of a day. You can have 3 push patterns over the course of a week. You can have them on daily charts. But 3 push patterns are typically for a move to exhaust itself before reversing and shifting in the other direction. Now, the other thing we talk about with structure are just some simple things with micro trend lines or bigger geometrical trend lines, not to trade off of them, but for looking for breaks in directions of movement. And again, if we do get a rectangle or a head and shoulders pattern or a double top or one of those bigger major reversal patterns, that's when we can target asymmetrical risk reward. So you've seen me draw with my Fibonacci tool. I just reprogrammed the numbers in there for 100% expansions. Major geometrical ranges, I will target usually a minimum of 100% expansion of that range. For smaller geometrical patterns, inside of a day's range, I will target a minimum of 2 times that range, which typically is usually a 50 pip box movement. So if I'm in a measured move, I typically will target 100 pips if it's a special geometrical range. Again, rectangles, double tops, whatever those scenarios are. But then we talk about the significance of the high and the low of the day. Those are the main areas where the market can reverse or break through. And we talked about the 3 things that markets do. They break out, they pull back, and they continue for a trend trade in either direction. Sometimes we'll see that over a Monday, Tuesday. We'll see a break in a larger geometrical range on a Monday, Tuesday, or a Friday, Monday, Tuesday for a breakout pullback and a continuation of a Monday, Tuesday range or a Friday, Monday range for a measured move of 200-300 pips. So again, just having a bigger perspective to help us develop our thesis when we're looking at the market. And then of course the daily high and low and the previous day's high and low, especially if we're trading inside of the previous day's range. So typically if one of the high or lows have not been violated, I will consider the previous day's range, especially if it's in 50 pip boxes, as still a major deterrent for us trading, looking again for highs and lows, reversing or breaking out and continuing. So we may see false break reversal trades, M's and W's, double tops, double bottoms, those sorts of scenarios, or we could look out for a breakout pullback continuation for a trending market. Then of course we talk about the significance of the equity opening times. And we're going to get a bit more into that today, talking about the 915 system. Because the equity opening times, if I haven't sort of clarified that. We're going to try and go more into that in more detail over the next few videos when we get into the opening times, where the market opens in relation to the high and the low. If you're at the high or at the low, then we're looking at the opening as a potential area for a pullback, reversal, or stop hunt back into the trend. If the equity opening times are inside of the previous or inside of the daily high and low, we will look for a stop hunt or continuation to the high or the low, which is one of the main reasons we don't really want to be in the market when the market opens, unless we're taking profits off the table. So if you're in the market and you've counter trended, so for example, the market may have trended and you've shorted it or gone long prior to the equity open, your trade may be the trap prior to them continuing the move. So again, just thinking, are you at the high or the low, or are you inside of the range? But today we're going to talk a bit more about that 3-hour window and the 915 system. So then we talk about round numbers and the significance of the market trading to or off or from those numbers. So again, the first thing I do when I look at my screen is if I don't see any of those markets at numbers, they immediately aren't on the table for me. I'll set alerts at round numbers for those pairs to give me a signal when they do get to numbers, because inevitably 90% of the moves, 90% of the best trades will come off of numbers, usually at a high or a low, for a move back to the other extreme or a continuation, especially double zeros. So again, our 12 candle window, that 3-hour window, and those 3-hour rotations of the market, consolidating for 3 hours and then moving, or moving and then moving again for an extension of a move over 2 to 3 hours prior to the market opens. If the market's at an extreme and it stop hunts back in, it may be 2 hours up and 1 hour down, those sorts of scenarios, but paying attention to the Asian close, Europe open, London open, the New York open, those 3-hour windows. Are we in consolidation, or are we already in a trending move where that market may be at a high or a low? And then price confirming our entry. So we look at pin bars, pin hammers, engulfment patterns. People have asked me again to keep posting examples of trades, which I try to do every video, go through a few examples that highlight how this happens every single day in a simple cookie cutter approach. So again, just looking at your screen, having the reason just to answer one of the questions is, why do I look at the pound cross pairs? Because they typically have the volatility consistently day in and day out of at least 50 pips per session, including Asia. And out of those 6 pairs, there usually is 1 or 2 perfect textbook setups. So if I don't get one in one particular day, I'm not worried about it. I know there'll be one in the US session, or there'll be one in Asia. But typically speaking, I'm just looking for one of those to match my criteria, because inevitably there's one every single day. Somebody asked me about the euro pound. It just doesn't have the volatility that these pairs have. The US cross major pairs, they don't have the volatility. They do have trades that will build up over 2 and 3 days for 50 plus pips. These pairs move every day, 50 pips a session. And then we talked about risk management. So 1 bar stops or 1 ATR stop, profit target is asymmetrical, 3, 4, 5, 5 to 1. If you get in as close or near the numbers or best fill possible, your stop typically will be 25 to 30 pips on the larger pairs, and maybe 20 to 25 on the pound crosses. We have had the volatility settling down a little bit more recently, so those are probably a bit more consistent, where obviously when we had the increase in volatility during the market crashing and everything else, some of those stops were 50 plus pips. You just adjust your position size. Right now I would focus on execution and process. And then trade management, of course, which I think is the biggest hurdle. This stuff is simple. People talk about, they're always looking for entry-exit techniques, but no matter what, they still can't trade it in live time, because they'll get into a winning trade, they'll get out, they'll move to break even too quickly, they'll get out too early, they'll risk 25 to get 25, they'll hold on to a losing trade and it'll be a measured move against them. They'll lose 100 pips when their original stop was only 25 or 30. Just little things the market does. We talked about this. They flash price, they hold price, they impulse price. It doesn't, you know, and they use time against you. I haven't talked a lot about that, but they use time against you. 15-minute charts. Seems people think that's a really day trading and super fast and everything else. It's a long time. 15 minutes is a long time. And when you sit there for 2 or 3 hours, people, if you're a trader, they want to trade. So the market uses that time against you. And we're going to talk about that today with the 915 system. And then, of course, putting it all together and then reviewing and being fully accountable and honest with yourself. How did you really do in live time? Did you just get into a trade and hold on to it and you woke up in the morning and you had some pips, so you say, okay, I did it right? Or are you actually looking at all these steps like an algorithm, or like you had your boss standing over your shoulder and saying, did I follow this process correctly? Are you mastering your craft? Or are you getting in and hoping that it goes your way and getting out with some pips and said, you know, hey, I scalped some pips and I know what I'm doing? This is designed to last consistently over time in any market. And if you master this and you're patient and you're disciplined and you scale that up according to earning size and not just jumping in because you want to make money or you need to make money or your buddy down the road's making money, master your craft, master all of these steps. You're going to learn your own lessons. You're going to pick certain trade setups that you identify with the best. And that's perfect. That's what you need to do. You need to grow your strengths, minimize your weakness, cut out the things that you're doing wrong, work on your headspace. We talk about this in the 7-step daily routine for high performance traders. Create a blueprint that's going to help you master the process and achieve the goals that you're after in your trading. Okay, so we're going to talk about the 915 trading system, and just before I do that, I want to answer another question. 2 things. All times that I ever reference are New York Eastern Standard Time. Google it. I don't know what time it is where you are. It doesn't matter what time it is in Perth. New York Eastern Standard Time. The bonus I have in Perth is that whatever time it is here, it's the same time when New York is on daylight saving time. It's just 12 hours behind. So if it's 5 p.m. here, it's 5 a.m. in New York. Now the second question that I had is which candle is the end of the hour and the first candle of the hour. If you're on a 15-minute chart, the 4th candle of your 15-minute cycle is the last candle of that hour. The first candle, of course, for me, I use the MetaTrader charts. My times are the opening times of those price candles. So my 45, my 0.45 candle is my last candle, and my 00 candle is my first candle of the hour. But that closes, that's the opening time, that closes 15 minutes after the open of that session. So what exactly is the 915 4115 trading system? What that is the time, New York Eastern Standard Time, 9 a.m., 9 p.m., same thing, rotates, 9, 1 o'clock, 5 o'clock, a.m., p.m., round the clock, 915, 915. What that is the closing time of the 4-hour charts. Now, when these charts match up, the 4-hour, the 1-hour, and the 15-minute all match up at those times, which is why I talk about in that 12-candle window, we usually, ideally, will get a perfect trade set up. Inevitably, when those times all match up, which is one of the reasons why a lot of the trade setups happen in that 3rd hour of our 12-candle window. Now, often in Asia, we will see a move happen in that 9 p.m. New York Eastern Standard Time off of the numbers just after the equity opens. The equity opens at 8:30 p.m. New York, 9 o'clock candle closes. That means that the 4-hour and the 1-hour and the 15-minute charts, somewhere within that first few candles, are the end of the hour or the first part of the hour, and it may be that 13th and 14th candle that we talked about into the next hour where we see a 50 pip move or more happen. So just to explain again, New York Eastern Standard Time, 9 a.m., 1 p.m., 5 p.m., 9 p.m., 1 a.m., 5 a.m., around the clock on daylight saving time. Daylight saving time, okay? That is when, those times when the 4-hour closes and goes into the next 4-hour session. So the 1-hour chart will be closing and the 15-minute chart will be closing at the end of the hour and the first candle of the hour. So if that makes sense, which is why we will see Asia will trade, might move 50 pips, and we'll see 1 push, 2 push, 3 pushes, and a reversal for maybe 100 pips or more, like we saw in the pound New Zealand, pound Australian yesterday. We saw the pound yen push up from the previous session's low into that 9 p.m. New York Eastern Standard Time and give an engulfment pattern for 50 pips down off the numbers. So again, when those 3 time frames come together, this system has even more power. Now again, if you go back and check your charts, reference the New York Eastern Standard Times. So from whenever your rollover is, the 4-hour chart coinciding with the equity opening times, and then your 15-minute charts at round numbers at the end of the hour, okay, with this cycle, or the beginning of the hour. When this cycle coincides, that's when you're going to get some very powerful 50 to 100 pip moves. We'll go over some examples today, but again, simple system. What this does is it again filters out even more garbage trades and allows you to focus on 3 times, depending on where you're at in the globe. The equity opens, round numbers, and then when your 4-hour charts are rolling over, 9 a.m., 1 p.m., 5 p.m., or 9 p.m., 1 a.m., 5 a.m., your 1-hour charts will be closing at the same time. And of course, your 15-minute charts will be coinciding with all those closes. And if you're at round numbers, you're going to either have a trade at the end of the hour or the beginning of that next hour in a large majority of the cases. And again, it may be into that 13th and 14th candle when that move gives us an engulfment pattern, a pin hammer, oftentimes even at the end of Asia, which is for me, that's a 1 p.m. I've said this before, if they drag a market down 50 or more pips in the Asian session or in the rollover, you'll often see the close of Asia, if it's gone into consolidation, move at the end of that session, and that is when the 4-hour and the 1-hour and the 15-minute all roll over at the same time. So we'll look at some examples. Again, hopefully that answers some questions about the last and the first hour candle. Also, why I trade the British pound crosses, and also what 3 push patterns are. We'll look at some examples on the charts today, but again, simple system. That alone, if you were just trading 1 session, that means you should be looking for 1 setup every single day in that 915 rotation when all 3 of these time frames roll over together. Hopefully you got some value from today's video, traders. Keep it simple. There's been 50 pips every session this week. There's going to be 50 pips again tonight in the New York session. So stay disciplined, stay focused, focus on the round numbers, focus on price action, keep things simple, and may the markets go with you.
Good day, traders. Stacey Burke from Stacey Burke Trading. Just be continuing our discussion on the 915 trading system. When the 4-hour charts line up with our 1-hour and 15-minute rollovers at the equity opens, and we're at numbers, if there's a candle price pattern in and around that 4-hour rollover window, there can be some very strong 50 pip moves. So that time frame again is at 9, 1, and 5 at any time around that 24-hour clock, New York Eastern Standard Time. That is, 4 hours from the rollover time, which is 9 a.m. for me in Perth, 9 p.m. in New York. 4 hours past that is 1 a.m. in New York, 1 p.m. in Perth, and then 4 hours past that again is 5 p.m. in Perth, 5 a.m. in New York. And then continuing into the next 4-hour block is 9 a.m. New York, just prior to the equity market opens, 9 p.m. in Perth, and going forward and forward. So on my charts, if these green circles are the last candle in that 4-hour window, that is also where we look for either an entry to have already been in place, and our rollover of the 4-hour charts is a possible re-entry into that existing move, or if indeed that may be the beginning or a setup just happening as that rollover of all 3 time frames is happening and coinciding at once. So again, if you're thinking about trying to use multiple time frames, the easiest way to do that is to reference time itself, sticking with one time frame that you're trading. And again, do this on your own charts. I don't try to force trade scenarios onto one particular instrument. I have 6 pairs up at once, but just to paint the picture of how different trade setups can present and how you can look at that on your chart to develop a thesis for your trade setup potentially building into that window of time. Because if you think about it, if there's a trade entry in our 12 candle window and we're at the end of that 4-hour rollover, perhaps at the end of the 12 candle window in London, and then we're at numbers and we get a pin hammer, or we get an engulfment, or we get an inside bar with an engulfment, any of those things, you have to be thinking that we may be in now for a 4-hour move. We might get 2 hours up, 2 hours sideways. We might get 3 hours up, 1 hour back, all those different scenarios. But we have another potentially 4 hours. We talk about those 3-hour window rollovers. So there could be a 3-hour move still about to happen as you enter that trade. These are the sort of things where you want to be thinking timing-wise to let these trades play out to their full fruition. So I'd encourage you to go and identify the times on your own charts and just be cognizant of that mentally when you're observing your trade setups, like we talk about the last candle of the hour and the first candle of the hour in the 15-minute rotations being important. Because if you think about it just in simple terms, if you were on an hourly chart, when those hourly charts close, the next candle opens and it may continue a move, it may reverse a move, it may be consolidating at numbers, whatever that may be, but it's going to happen at the end and the beginning of a 15-minute hourly rotation. And when you coincide that with a 4-hour rollover, then you've got potentially major moves happening, especially if it's in our 12 candle window, in and around there, 1 or 2 candles plus or minus, and again at numbers, consolidation, trend, whatever that may be, with our price pattern confirmation. So again, just looking at the pound New Zealand, this is yesterday, April 22nd. We can see a short trade setup that evolved in the rollover and then continued with an 3-bar engulfment in that 4-hour rollover for 50 pips. They pulled that back in the next 3 hours with 1 push, 2 push, 3 pushes into our second 8-hour rollover for 50 pips stop hunt down, consolidating with 3 pushes into the end of that 3-hour window for the 4-hour rollover with an inside bar shift, fighting for the best price on the inside bar breakout, 1 bear candle stop, however you wanted to trade that at numbers, whatever that may be, for a breakout pullback continuation of 150 pips. So again, just US session, breakout pullback inside of the range, not at numbers, 1 push, 2 push, 3 pushes down, pin hammer off of the lower 50 for a stop hunt to the high for 50 pips. Heading into today's session, we saw a big 1-2 push with pins at the top, an engulfment, and then a pin hammer at the end of that 4-hour window, dropping down to the 50 pip marker, consolidating, and then a pin hammer off the numbers for the second move down of 100 pips and consolidating. And even though we had pins and hammers on the bottom, we're in a down move with a pullback, engulfment, pin hammer at the end of that 4-hour window, and we're now currently possibly heading down to stop hunt traders who were long off of yesterday's double zeros. If we take a look at the pound Oz, again yesterday, just circling the 4-hour rotations, coinciding, very similar movement to the pound New Zealand, pin hammers, engulfments, pin hammer at numbers, pin hammer at the US Open for 50 pips, underneath of a pin hammer. Again today, pins to the high, pin hammer at numbers, a pullback into that peak formation. So if traders were at break even and got stopped out on that, they can re-enter the trade, pin hammer short for 100 pips down, consolidation, engulfment off the double, underneath the double zeros, and now possibly another 50 pip move down. Just looking at the random pairs the last couple days, pin hammer in the middle, not at numbers, consolidation, Asia close, engulfment at the low of the day, pin hammer for a 50 pip move up. The end of the 12 candle London window, pin hammer after an engulfment for 50 pips up to the high, consolidation underneath of the peak formation, inside bar at the US Open for a move back down to the lows. Today, again, not at numbers in Asia, not at numbers, but a stop hunt to the high. Nothing at the low of the day, but a reversal to the back to the high at numbers and engulfment, sideways and a pin hammer. We just may have an engulfment setting up right now on the pound for a move back down to the low. So again, traders, just think in simple terms, coincide that 4-hour window rollover on your charts with your 1 hour and your 15-minute cycles. Equity opens, 12 candle window, round numbers, and price patterns, engulfments, pin hammers, as close to the price, fight for the best price, 1 bar stops, high of the day, low of the day, 50 pip targets, whatever that may be, measured moves, 100 pips. But think in simple terms. Try to use those timings to narrow out poor quality trades and to align yourself with a potentially larger move with all 3 time frames moving behind you. Stay disciplined, traders. Stay focused. Keep it simple. Hopefully you're improving each week. May the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined and may the markets go with you.